Today, we are going to talk with Mitchell how he is using the AI for his own trading, because we saw he was very successful. I think the last update we had in a row was 12 wins in a row.
Well, I actually haven't. Not to boast. It sounds stupid, but I haven't kept track of my wins because I literally pretty much haven't had a loss yet.
For those that see this for the first time, let me explain very quickly what the prediction is, how those different areas work, and so on. So you see in the middle is this blue line. This blue line is, you could say, the center of the eye. That is the prediction the eye gives us that we are going to display completely unfiltered on the chart. Around that, you have the areas of with different probabilities for the close price. So as you can see, we are predicting 24 timestamps ahead, 15-minute close prices. That is, in total, 6 hours ahead. And those two areas around the blue middle line are the probabilities for the close price being in that area. That means the bigger the area, the more likely it is that the close price will be in that area. That is how the prediction works and how the probabilities work. Trading isn't always about trading. It's most of the time you're waiting. You're waiting for a good prediction. You're waiting that the trade goes as you want it to go. But trading is patience. So it's 1%, you could say, execution and 99% waiting. And the same it is when you're using the AI. I mean, we see that there are predictions, but that doesn't mean we need to be trading the whole time.
I have a question.
Yeah, sure.
Yeah, I was wondering, so when you say to manage your risk properly by having both long and shorts open, are you talking about having long and shorts open on the same pair, or that's on multiple pairs? So some pairs will be long and some pairs will be short.
Yeah, that is on multiple coins. So it is not about hedging that you're in your current token and you're going long and short in the same direction. It is across different tokens. For example, also what I try to do is not having more than 6 trades open at the same time, because you will always want to monitor them a little bit, want to see how the prediction changes, how much the prediction changes. So I always try to have at maximum 6 trades open at a time, and then always 2 longs, 3 shorts, or the other way around. And then I have been trading those smaller market movements with very low leverage, so leverage 5 to 10 for position size was around about 1, maybe 2% of my whole portfolio as rule of thumb, and that's what worked for me.
Great, thank you so much for the clarification. I appreciate you.
Mm-hmm. Could I also ask a question, Darth?
Sure, anytime.
I had a question about the differences between the different style of instruments. So spot versus futures and perpetuals. Can somebody be as equally successful, I guess, if you're going on a 1-to-1 ratio with spot compared to the perpetuals? And then why are you leaning more towards the perpetuals versus the spot trading?
That has different reasons. So, for example, first of all, there's the fee component. Like spot markets tend to have higher fees. So if you're trading a lot on the spot market, you are producing more fees, and fees are always a little bit of a problem. If you want to hold positions a long time, so 4 days and so on, you're better off fee-wise with spot trading, because you only pay on buy and sell, while with futures, you're paying the funding rate. That can be good for you or that can work against you. But for having or opening and closing your trades, you're having lower fees. So if you want to make a lot of trades that are open a very short amount of time, like a few hours a day maximum, then futures is better in that case. On the other side, you can't short with the spot market. You can only with the futures. And if you want to short, then you need to trade futures. On the other side, if it comes to spot market, you can't use leverage. So it's always only buying and selling the underlying asset, while in the futures, you are buying and selling the contracts, and you can use leverage. Leverage isn't always the best to do, because leverage is also makes everything more risky. You need, again, to have good risk management in order to decide how much leverage to use. And there are, again, various techniques that you can use. Just Google for them. Like, there are tons of YouTube videos and so on. They can explain what I am trying to explain much better when it comes to position sizings for manual traders.
And also, just one more question, if you don't mind.
Go ahead. I have time. I mean, while we're waiting for Mitchell to return, I have the time, and we can talk about anything we want.
Sure. So you know, there's obviously there's a reality. You know, some people may know of it, some people don't. But a lot of these markets are heavily manipulated by large institutions. So, is your does your prediction dashboard look into this, or is this strictly just based on the mathematical approach, and it doesn't look at these other, I guess, hidden factors in the market for predictions?
First of all, it depends on what type of manipulations we are talking about. For example, if there is about bigger market movements itself, then they are learned the pattern in the past. Like, for example, if we are talking about manipulations that are happening over the course of a few minutes to a few hours, then they are already understood those patterns. On the other side, if we're talking about market making when it comes to coins that have a very small market cap, a very thin order book, then it could be that on some exchanges you're getting liquidated while the price didn't move there. They are just, because of the order book is being so thin, your take profit and your stop loss are getting triggered because those market makers are going to hunt for those take profits and stop loss to move the market in a few seconds. Up to, I think I shared a screenshot some months ago where that happened to myself. It was on a centralized exchange, I'm not sure. Like, the price moved minus 2% in 3 seconds and then all the way back up in the next 1 second. Like, that is the manipulation I am talking about when we see those long wicks on the exchange that are only there for market makers that are hunting for stop losses. And that's one of the reasons you should always look into the exchange, see how those books look, compare it to other exchanges. If the order book is thick enough, if there are enough orders in, and if there's enough volume to trade. Because otherwise, if you, for example, like with the Bitcoin Cash example, if you're placing your 0.5, maybe 1% stop loss, and there is like no liquidity in the order book, then those market makers will see that stop loss. And then if there are enough people, they will push the market in a few seconds to hit your stop loss to get their orders filled, and then the price moves up again, so where they are able to sell. So that's the type of manipulation I see on a few exchanges where we don't have the liquidity in the order book, and that are also the coins I don't like to trade. So, for example, another rule that I have is I only trade the top 20 market cap coins because they're big enough. There is enough liquidity in the order books, so we don't see those long wicks, those long candles that are only there to stop or that are trying to hit stop losses of the traders.
Am I okay to buy the AI bot that you were talking about there? Just go off and buy it this evening from you? You know what I mean?
So the bots are not ready as of the present day. We've been putting in hours and hours in both in calls and sort of code. We've gone back to the drawing board multiple times. We really want to get that right, and we don't want to launch something that isn't right. So anyway, bottom line is that I think at this point we've figured out a really good structure for them. The strategies part themselves is going to be abstracted away. So we'll be sort of rolling out the bot with a very simple strategy initially. And this should happen within the next month, I think. and then we'll be launching more and more advanced strategies as we test them. And some of these strategies can also be like user provided through this Hive AI that we came up with.
Okay, thanks very much. I look forward to that. I will. Thank you, lad.
Because I know we're getting into a bullish market. We have the basics. You know, we have a pump, we have a pullback. So you always know that a coin is going to go up and a coin is always going to come down. And that brings me to my next point, that I always look at a coin, for example, Bitcoin, and I decide which ranges does this one trade. So if we look at the AI, the top range would be $65,513, and the lower range would be $64,518. The AI is telling me here we're going to be sideways moving, because as you can see, there's not a whole lot of tops or bottoms. So it's going to be moving sideways. So this would be scalping. I look at it as the gray line, the gray area is very close to the blue line. And the gray area here too is very close to the blue line. So there's not much movement going on here. We're not going to be doing a whole lot. And here, same thing. We're not going to be doing a whole lot. And same thing here and same thing here, etc. So this would not be for me personally to say I'm going to trade this, because this is for me scalp trading. When you look at the chart, I always like to look at the chart and see where we're at. Okay, we're at 65K.65. I'll go to the prediction. I'll put my mouse right here, and the blue line says, okay, well, 65.34. A bit higher is 187. And then we have a bit lower, bit of the lower ranges. 64,931. So as you can see, there's not a whole bunch of moving, but how do you decide what you want to trade? Because that's the question I get is, how do you decide your entry, and how do you decide if it's going to be a long or a short? I always say, and this is just my personal opinion, you can, in any market, you can trade short or long. There's no right or wrong. You can be bullish in a bear market, and you could be bearish in a bull market. It all depends on how good are you in trading, basically. So how well can you spot the changes? One of my main indicators is I like to look at the volume lines. I like to look at volumes. And I like to look at the moving average and difference. The moving average line and the difference, those are, for me, very good indicators, because they indicate a price change. When you see those lines, I can't show them here because I don't know where this indicator is on my computer, because I do most of my trading on my phone. But you see the lines crossing into each other, and that could suggest a price change. And the price change could say, okay, we're moving from a bullish momentum to a bearish momentum, and from bearish momentum to bullish momentum. So once I know that, once I've established what am I looking at, so if you would say, right now we're looking at Bitcoin, right? And it's 64,999 euros. Then I'll go back to the AI, and the AI tells me if the blue line is 65,000 euros. What would you do in this case? Would you say, okay, you know what? I'm taking the short from this point-ish, from 65 to 45. I'll put on a limit order. And then I'll exit if I'm lucky, and if I want to keep on, like, or have a longer term around 64,816. It, to me, is not the biggest gap in the world, so it wouldn't be really worth it for me to trade, especially because there's little volume. As you can see here, let me try to zoom this in a little bit. There's barely any volume. as compared to a little bit earlier. So here we have a bullish volume candle, which suggested it will go up, and it did, and it even surpassed 65K. It almost went to 66K even. But as we know in crypto, you need a pullback, and we need to draw back. So what it's doing now, in my opinion, and also what AI is basically telling you, we're consolidating. We're consolidating a little bit, and we're going to be accumulating. And also one other thing is, in crypto, people are all about, is it going to hold the floor? Is it going to hold the price? Because everybody wants Bitcoin to go to 80K, 100K, 120K, but it always needs to come back. It always needs a correction, and that sort of stuff. So for a longer term play, I use CoinGlass in conjunction with the AI. And if the AI tells me, okay, the top is about 65,513, and I go to CoinGlass to the liquidation map, and it says roughly around that price is also where the highest liquidations are, I'm going to short it from that point, because there's always two ranges, and if the higher end, so in this case it would be 65,513. If those are the highest liquidations, there's also one at the bottom where people want to enter or want to maybe short it from, but more likely because we're in a bullish market, they want to push it back up from that point on. So what I look at and what I think about also is, okay, we're right now at this price, it's trying to move up, but as we know, there's barely any volume going on. So it must come down then to grab liquidity before it shoots back up. So on the longer term, we can see here, there's a little peak right here that pushes it back up to 65. So instead of saying maybe I'll short it, you could also say, you know what, I'll long it, and I will take a position right in the dark gray area, which would usually, or in some cases would be more the danger area where you don't want to go, and those are the areas that I do trade in, because like I said before, or before I got cut off, is that I like to have a lot of room in my trades, and I like to know that, okay, I'm going to enter fairly high, almost at the top, and then short it from there, and then take it down, and then take my profits as I go. Or in a bullish case, I would say, you know what, I'll take the bottom around 64,451, and I'll long it up to 65. That for me would be a reasonably short trade. But if I want to take it further, I would say I'm not going to enter in these ranges at all. Because if I zoom out all the way and I have a good look at the chart, I see even more information. I see there's a gap, and there's another gap, and there's another gap, and there's another gap forming. So all these gaps, here need to be filled. These kind of got filled over here, but it always creates a new gap that has to go down before it can push back up. So, it really depends on your trading style and what you like to trade, and how, to determine if you're going to be day trading a little bit, which I sometimes do more than not, is continuously look at the chart, continue at the changes. As you can see now, I think we have another prediction change, but with more peaks. So that's another thing I look for. How many peaks are down, facing downwards, and how many peaks are facing upwards? This to me also can be a telltale sign of, okay, we have an indecision candle here. So it might move a bit up to grab some liquidity, but it has been facing pressure also. the gray area around the blue line is getting a bit bigger. So it's consolidating, but it's it's giving me a little bit of downwards movement before later on once we grab the liquidity to try to push it back up. Sorry, over here. To once they grab some liquidity and they want to push it back up. So again, where would you enter? Where would you say, okay, I'm gonna enter here or there? Really depends on what are you looking to trade. If you want to short trade it, find yourself an entry that's higher, I would say, than the lines are giving you. Because also in crypto, obviously, markets can be very volatile. I've seen charts or predictions that faced all the way down, and we had a huge green bullish candle all of a sudden. Prediction changed, and all of a sudden it changed to a bullish market. But that's the thing, it was always a bullish market, and it was never a bearish market. I like to watch the AI sometimes for a minute or two or 5 minutes, or even wait for the prediction to change. If I find that the market is a bit iffy, I'm not sure if it's going to go either left or right. So let me just wait for an extra confirmation. And if the AI changes its prediction, but it has roughly around the same prediction, then that gives me a little bit more of a confirmed, okay, we're going either long or we're going short. So to give you a bit of an idea, what I just said is we have this little top coming up here. Once I go to the AI screen, and we can see a little top forming right now. So this is why I said, if you would look to short, don't enter on the blue line, but enter above it. Because as Dart always also said, like the gray area above or below it is the likelihood of where it will go. So had I entered around here, I would have already screwed myself up a little bit, because this is a little too tight, because right now I'm on 65,118, and if I look at the chart, we're already at 65,228. It's only $100 off, but as we can see, it also comes back around here, and it comes back around here. So this could mean for me two things: either we've hit our cap around here, and that's most likely it. I think that Bitcoin is going to have a little bit of trouble of breaking through a 65.5 or 66K ceiling even right now. But you would be able to short it real quick. And this is scalp trading, right? Why do I call this scalp trading? Little volume, little movements, and you have to be very quick. Because in one candle, you can go from 65,465 all the way to 65K. So the $400 price change. Now, if you put some leverage on that and you have a bit of confidence, you can make a nice buck. You can make a nice quick trade, quick profits. As we can see live here, the peak is forming. Second candle is already going down. And this is not to say that it always goes like this. And this is exactly what I mean just now with this pushing of the candle. We knew it was going to push up, and that's why I said I want to be a little bit up here more, because I know it's always going to be a bit further than it's actually saying. But that's how I look at the AI. It's not giving me exact entry points. It's giving me room. Like, hey, we are going to go over here somewhere, right? Maybe the area is extremely tight, so that's why I'm like, I need to go over it because I probably know it will go over it. Then short it. And then take your profits or wait for the next candle.
All right. So
let me go.
I believe the prediction intervals get calculated slightly differently for AI 1.5, right, Johannes? Like here, the P10, P90 are a bit smoother, and I think in our AI 1.5 is slightly different looking.
Yeah, true. Sorry. Yeah, good point. This is AI 1.4. This is AI 1.5. I actually use AI 1.5 for 99% of my trades, and AI 1.4 only for Bitcoin because Bitcoin is only available on that, but also because it's still very accurate. But AI 1.5, all other coins is definitely more accurate.
Yeah, that's also what I said in the beginning. Like, we are comparing charts, and it makes it extremely difficult to say which AI is better than the other. For example, one of the things that we notice is AI 1.5 is more accurate, but also not as volatile as 1.4. On the other side, I do like the predictions in the wall on 1.5 more than on 1.4 because they're calculated a little bit different and they are more dynamic. Like, they are, I would say, more accurate. They're more accurate and they help you to understand the volatility much better than 1.4. But from the last polls we had in Discord, there's still a mixture that people like to use or a few like to use 1.4 and a few others 1.5. So yeah, it's still up to you or to the trader which type of AI he likes more. And with the next version, when we are going to get into 2.0, the new tech that we are going to deploy, then I mean, that might change again. So it is always, you need to find which AI fits your personal trading style. For example, I think Kevin is here with us. Like, Kevin also had an idea where it is very important for him to find out in which ranges, like Mitchell just said, are the coins moving. And that can also be strategies that your trading is based on those ranges and on those upper and lower movements in which the price of movement is.
But I think Johannes is gonna retrain the BTC 1.5, right?
Yeah. Somehow there was, we retrained like the AI 2 months ago, I think, if I'm not mistaken. And there was some, as Martin tried to put that on, there was some error, and now I'm trying to find that. So I can retrain AI 1.5 on Bitcoin, and then we can put that on again. So
I was just about to show you guys one last thing. Now that 1.5 is live, because I want to show you the difference in prediction. And this is a really good one because these are two completely different predictions. 1.4, we refresh that so we make sure that we're still on the same. And 1.5. So it's 1.4. It gives me more of a general line of how it will, in the range it will move. And for 1.5, it gives you a bit more details, like a peak and a bit of consolidation, a bit of pullback, another peak, another push up. So this gives me a better way actually of looking at things and like, okay, which direction are we going in? Is it a bullish move? Is it a bearish move? But I can fairly say this is reasonably bullish, and also because we're in a bullish market. So aside from looking just at the AI, I also wanted to let you guys know that also make sure you always do your due diligence and know a bit about the market. Make yourself familiar with candle reading. Make yourself familiar with the MACD line. Make yourself familiar with volumes. Those are very basic things that can help you tremendously get you a good entry position. And also, I like to trade Bitcoin a lot right now. Because I'm trading Bitcoin so much, I kind of getting more and more a better sense of the patterns Bitcoin is forming. You can move a bit better with their movements. It's not super unexpected for me anymore if Bitcoin goes up or down at any given point. And if you study a certain coin, then you start to see patterns and all that. And of course, that's what the AI is for, because they did that all for you. But if you really want to become a good trader, and if you like, manual trading with the AI, you would do well in learning about the candles, about volumes, and about MACD. Basically, those are my main indicators next to the AI before I jump into a trade.
Yeah, for example, during the time you have been talking to yourself and you have been disconnected,
Right.
for example, I explained that I like to follow trends, that I like to try to find trends, and with the AI's help, then try to follow the trend, and have very one-sided predictions that help me to follow the trend. That's like, for example, how I do. And besides that, for myself, I'm using support and resistance lines, because they are helping me to understand forming channels and following it inside the channel that help me to, for example, short inside the channel while being in a still upwards trend and so on. Like, there are many ways you can, as you said, you need to understand the candles, you need to understand the movements of your indicators, and then see which type of indicators and measurements you or fit to your trading style, and then combine it with the AI. To help you understand, or as you said, like understanding where the trend goes, and based on that, build your technical analysis around, or build your technical analysis first, and then use the AI for confirmation. Or if the AI disagrees with your technical indicator or your trading setup, then don't trade. Like, there are literally a lot of things that you can do, and where the AI is going to help you with the trading.
Yeah, absolutely. And one last thing I want to add to that is, I know a lot of people are asking, and of course, the AI is a masterful tool, but that's just it is a tool for now until we have the trading bot and all that stuff. But it's still a tool that needs to be learned how to use. I've had talks with other community members who private messaged me and said, how are you able to get all these profits? And every time I enter a trade from the AI, I lose money because it goes down. It always goes the other way around. It always goes, if I take a short, it goes long. And if I take a long, it goes short. So how do you do that? And even when I say, I just jump in sometimes literally without looking at any other indicators at market price. And I'll just let it run. But I only do that if there's a clear indication there's a long or there's a bearish momentum. That's the only time I will just jump in market price and just let it run for a couple, 10, 20 minutes, see how it goes. Before I start setting in my stop loss and my take profit orders and all of that. That's one of the reasons why I say I trade a bit risky, so don't per se copy trade me. But also, I have been learning for the past year mostly to get to the point where I feel comfortable and I know what I'm doing and I know which coins I feel comfortable trading in, because not every coin is my cup of tea. I've lost a lot of money on Quant, for example, like a shitload of money, and it was also because I just wanted to revenge trade every time, because I felt mad at the coin and Quant. We still don't get along. We still don't like each other. So I'm not even going to play with that, even though it gives me peaks and all that other nonsense. And it's like, oh, it's looking good. We can actually reach some highs. No. Every time we tried that, I lost on you. So I'm not trading that. But with Bitcoin, I'm familiar. I know the pattern. And if I see a clear indication on the AI if it says, okay, we're going to go up or down, I will jump in market price. But for the lot of you, I definitely advise to do your due diligence first, because it will help you tremendously if you just know a few basics and then learn how to work with the AI. So if the AI is telling you right now, okay, we're at 65,277, don't enter. Wait for it. Right now,
Yeah,
it's giving.
that's also what I said. Like, trading isn't about doing actions all the time. It is like 99% it is waiting for the good entry.
It's boring. It's boring as hell, and that's why I'm like, I set a limit order yesterday for 62 something, and we were well over 63. I didn't even know if I was going to get it today, and it just happened to grab my order. But also, I pulled out before it hit 65K. And that's because I didn't want to risk losing my profits that I had right now. Because as we know in crypto, and I've seen it many a times before, you can have flash crashes, and those are a real biatch. Because flash crashes are basically where the coin drops 10%, all of a sudden 5%, because they just need to grab the liquidity. And one thing you also know in trading, everything you do in trading is literally nothing. You're a drop in the ocean. Every a dollar you make is a drop, not even in the ocean. The real people who have the power are the institutes, and those make the price. And we are just the fish trying to snack in between, and take some profits in between. But the real prices are being handled by the major corporations, BlackRock, GreyRock, and that sort of stuff. They have the most supply, and they can make or break the price, basically. But to come back to my point is, just make sure that you always do your due diligence. Don't enter a trade if you don't feel comfortable, if you're not sure, even if the AI is telling you 100% sure, and if it turned out to be right, don't feel bad and think, oh, next time I'm just going to do it, because that's how you make mistakes. Letting your emotions take over, not having a clear head, and not really taking your time, because that's what it is too. Trading takes time. You want to look at the chart, and then you want to look at the chart again, and then you want to go look at the volume, and then you want to look at the MACD lines. And one thing I haven't even really touched upon is time frames. On which time frame do you want to trade? That's a very important one, actually. If you're trading on a 15-minute time frame, then I would say, okay, great. Let's look at the AI and not waste too much time, because we're only doing a short trade anyway. I see a lot of room here that it could potentially go. So how about we take a long from 65 to 65 and a half? If you feel comfortable doing that with a bit of leverage, you can make a nice little profit. But that's only if you understand what kind of trader are you, what do you feel comfortable with, and you don't have to trade every single candle. That's another thing. Do not try to trade the long here and then the short here and then keep on shorting and then longing again. I like to trade, okay, let's enter around here and then exit around here. It might take you all day, and you will have some pullbacks, and you might get scared a little bit, and then you'll be happy again, and you might be scared again because maybe it is going down. But if you know what you're doing, then by this point you should already have a stop loss for around here, for example. So you would be well into profits, even if it falls back, even if it drops to a certain level. But
so you only set a stop loss once you've already had some profit?
Yes, but that's why I said I'm a risky trader, and I know what I'm doing most of the time. I usually said it, like I said, I lost a lot of money, but and at some point I literally was like, I'm not going to trade anymore. I'm going to quit trading but my thing was, I let my emotions take over, and every time I let my emotions take over trading, that's when I went left. because as soon as I saw some red numbers, I was like, oh God, I gotta pull out. And then it turned green again. And I wasn't even that much in the red. And if I was in the green a little bit, I was like, okay, let me pull out now because let me at least take my profit, 1 or 2 euros. And then I would be a little overconfident. I was like, you see, I can do this. Let it trade. Don't do any other due diligence, but just to think I know what I'm doing. Think is the actual keyword here about what I'm doing with the AI, and still lose money, then get mad, and then try to do it all over again. But then you're starting revenge trading, and then you get to this cycle of, yeah, do you really know what you're doing? So I had to take a step back and say, okay, if this is really what you want to do, and I know I can make money with trading, and not just that, it also interests me. I like knowing about how this works in the trading and the candles and the volumes, and because I find the more you know that, the smarter you can be at trading. Because what we're doing is nothing new and has been around for hundreds and hundreds of years, but we now have the luxury of an AI system to have hundreds and thousands of indicators built in, basically already doing the majority of the work for us. And the only thing I have to do is know what the candles look like. What do the candles mean? How do I know if we're bullish momentum? How do I know if we're bearish momentum? And maybe a few other indicators that could help you, but more to pinpoint, refine your entry. And that's how I use it. You refine your entry with that. You, and like Johannes said, he uses support and resistance. So there's not one clear-cut cookie way to trade. For everybody, it's different. But the AI, and if you have a bit of understanding of the market and how it all works, yeah, I would say you can't lose. You literally cannot lose then.
I like how
And
you
I guess
covered
that's
some
a
of the
perfect sentence to round that up, because I think at the beginning I said we're going to talk like 10, 20, maybe 30 minutes, and now we are more than 1 hour already in the meeting.
I know.
I mean, it was awesome talking to you, Mitchell.
This is my last thing. Like I said, Johannes, I can't stop talking. No, I'm just kidding. I'm gonna.
I mean, if people like what this format that we are doing, like Traders Talk, I mean, we can make these kind of voice chats more often, having a bunch of people that are trading with the AI, discussing trades, discussing ideas, yeah, and just then, like social trading, you could almost say. And yeah, let me summarize. Let's round up the whole Traders Talk that we had, and then we can open the mic or answer a few more questions from the community, because I think after more than 70 minutes we can slowly come to an end. And if there are now new questions, I mean, we can do this format again, have Mitchell over, have someone else over, and then just share some ideas, talk about how we are trading and how we are making money from the market, because at the end that's all we need. And I'm very happy that we had the time today so we could talk about through this. And I mean, Martin already said it, he found a few new ideas, what to change, what to end. And with Mitchell, like he likes to talk, I like to talk. Let's bring him on a second time, maybe in 2 weeks or whatever, whenever we like. And then make a few trades together and profit from the market. Thank you so much, everyone. And thanks
so much, everybody,
for watching. Excuse me?
I said thank you so much, everybody, for joining us in this thing before we end the recording. And if anybody has any questions or anything, now that we're still on the record, then you feel free to ask in the general chat and do not DM me.